Welcome to the 40 Finance channel, everybody. Today we're talking about Super Microcomputer Incorporated. This is one of the most interesting stories of the year in the stock market. And the reason that it's so interesting is because where this stock sits right now at $31 and some change, there's a lot of debate. Is this the buy of the century? Is this the buy low opportunity that you don't see too much anymore in the stock market? Or are the reasons that this stock is down upwards of 75% of where it has been, are those the reasons to run away as fast as possible? And what's really crazy for me as someone who's on the sideline on this particular stock, I've been kicking it around a little bit, but I haven't made any decisions, is there is a healthy audience on both sides of the aisle, whether that's buying it now or walk away, run away as quickly as possible, potentially even short this stock. There's a short report that came out on this one a few months ago. So, for me, I'm just going to share what I see on SMCI, obviously focused on fundamentals, like I always do on this channel. Now, before we get started, quick promotion as always for Seeking Alpha. This is the stock research platform I use and will be using all throughout this video today. If you're interested in learning more about Seeking Alpha, getting yourself a discount, a free trial, and potentially supporting my channel at the same time, make sure you scroll down the description and click on the promotion link down there. Get yourself an awesome setup heading into 2025. Now, if you're new to the SMCI story, you have lots to read on. We're not going to be able to cover it all in this video. The bottom line is this company's been around since 2018 or so. They specialize in servers and server racks and all the components that get these things connected. And just like their competitors with Dell and Hewlett Packard, they've seen a huge run up here in this AI world. And what makes Super Micro particularly interesting is they specialize in these liquid cooled servers that the demand for this is ramping up in this AI era. So they're in a good market. However, that market does have low margins, typically 10% or less. So the sales in this market are huge, the revenue, so to speak, but the profit margins are much smaller, and there is competition out there. Now, in terms of why did this stock go down so far so fast, it's mostly tied to accounting irregularities, some of which go back to 2018. Currently, investors are concerned about the company's revenue recognition practices, financial reporting issues, corrections of financial statements, and auditor resignations are all red flags, according to this author. The fact that these issues continue to come up over the years is particularly large red flag. Couple more points here covered in another article. Valuation concerns arise from expected sales decline. I think that's an opinion. Market share loss, potential delisting. So this one was as high. This was in the QQQ, this stock, the top 100 NASDAQ stocks. All this accounting stuff, NASDAQ considered delisting it. However, Supermicro did get an extension from NASDAQ to submit their correct accounting statements. The deadline for that is sometime in February. So that was a summary of the bad news we've seen over the past several months. But in the stock market, sometimes bad news, declining stock price can lead to an opportunity for the right investor. And that's what we'll cover here. This person, the Asian investor on Seeking Alpha, I think did a nice, succinct job of laying out the positives, if there are some, for Supermicro. And so here's the other side of the coin, if you will. Supermicro's shares have lost most of its early 24 gains, but sentiment improved after the firm successfully submitted a compliance plan to NASDAQ. The AI hardware company faces strong growth prospects in the liquid-cooled server racks market, driven by AI and data center capex spending. Risks do remain due to financial reporting delays and a potential delisting, but a moderate P/E ratio offers a revaluation opportunity if issues are resolved. Improving gross margins in 25 could significantly enhance Super Microcomputer's valuation despite recent exclusion from the NASDAQ 100 index. So, in my opinion anyway, those are balanced reasons to be positive and at least like look at this stock and think about it, even if it's only for your own entertainment. Now let's take a look at some of the fundamentals of the company and see what might be the opportunity if you believe that some of these clouds go away in the short term. Okay, here we have the core valuation metrics today for Super Micro. The non-GAAP, or let's just scroll here to the GAAP. The GAAP trailing 12 months PE ratio is 16. Okay, the sector median, which would be information technology, sector median is 30, and Supermicro's 5-year average is 2244. Now that's looking backwards, okay? And so some of that doesn't even matter because there is so much ahead for Supermicro that not only do they have to prove, but they also have to bounce back in some ways when you think about the margins and if any of the revenue gets affected by these rumors, if you will. P gap forward right now would be 1252. We'll take a closer look at that in a second. Again, sector medians running in the 30s, and SMCI's 5-year average was 18. And if there wasn't a cloud of controversy hanging around the company, you would probably want to dig in much deeper on this one. If you even take a look at the PEG ratio, we'll just go PEG ratio non-GAAP going forward. I mean, way under 1 at 0.31. Then a quick look here, price to sales in the past, 1.19, projected in the future, under 1, 0.75. Both of those are below both the sector and the 5-year average for this company. Okay, now in terms of earnings estimates, looking ahead from the Wall Street analysts, and keep in mind that these are estimates for where they stand today. This is, several months after the initial news has released. Obviously, it's an ongoing situation, but you do have the adjusted, if you will, the adjusted estimates based on this news that is already out. And in the last 90 days, you have had several down revisions for SMCI. However, the net of it all comes out to $2.78 for the fiscal year, which, by the way, ends in June of 2025. So this would be roughly late July that this would be reported on. And you do have that forward PE if they hit 278 at 1151. So that's right in line. And since they report in June, you're going to have a new number heading into late spring that everyone's going to be focused on. And that to me is a benefit for a company in this situation, particularly if they can change the narrative and clear out some of the problems that they have right now. 2026 EPS estimate is 369. That would be below 10 if you want to go forward PE as of, let's just call it August 1st, if they stay in line with these numbers. Revenue estimates, 25 billion, just shy of 25 billion for the 2025 year, and then potentially up to 30 billion for the 2026 fiscal year. And if you want to look at that year over year on a percentage basis, 278 would be a 25% growth from fiscal year 2024. And then on the revenue side, if they did hit that 25 billion, it would be a 66% growth from fiscal year 2024. And then looking ahead from there, it does look like growth potentially slowing if you believe these numbers. 30 billion is the current estimate. That would still be a 20% growth year over year on revenue. However, much slower, obviously, than what you saw in 2025. That being said, it is well into double-digit growth, which is something that I'm always looking for. And it is potentially double-digit growth on the top and bottom line. Because even into 26, if you hit 369 or hell, even 350, you're way into double-digit growth on the bottom line. Now, as far as upside potential for the stock, you're at 31 today. It has come down a little bit over the past month after a small spike in November. You can see the low was 1801, and now you are back up to 3139. And for me anyway, I could see an easy short-term boost back to $40, $45 as some of these clouds clear. But if I were to pick a fundamental valuation on this particular stock, I'm going to guess that the EPS estimate just comes down to an even 275 at that time. We saw that SMCI had a 5-year average forward PE of about 15 before all of this stuff got started, right? So if they're at 1151 now, and we gave them a 1350 instead of an 1150, that puts the price at right around $37 or so. And that's with taking a couple pennies off the EPS estimate. Now, the big transition is if and when the market starts to talk about the 2026 fiscal year. And this could be something that happens, in the spring. It could be something that happens closer to the reporting of the end of this year. But just for the sake of argument, let's just call it June 1st. We'll say the clouds have cleared. We'll say that operations are normal, things are getting better, and there hasn't been any long-term impact to what has went on over the past several months. And with that, we'll say this 369 consensus estimate remains. So 369, and then we're going to multiply 369 by the 15 forward average over the past 5 years. And that ends up being a price of about $55. So bottom line for me, if I were to get into this one, I definitely wish I would have gotten it at this $20 or slightly under $20. But who's to say that that day won't come back around? And then if all the clouds clear and they continue to hit their expected numbers, then you could easily be at $50 to $60 by midsummer. The obvious asterisk to throw in here is there's a chance it does nothing at all if the clouds don't clear, okay? You could go back to $18 and sit there while they have additional audits and additional regulators come through the company. It's hard to tell. That's where you're going to have to read and pick a side on your own. And I think the tough part for investors is looking at all the opportunities in stocks right now and, determining if this one is really your best potential, your easy bet for 2025 with all the other technological advancements that are going on out there. All right, guys, so that's my take on Super Microcomputer. Let me know what you think of this one in the comments. Hope everybody's well. We'll see you on the next video.